Okay, guys, if you give me an audio check, it'd be greatly appreciated. I'm checking Twitter. Thank you very much. Appreciate that. All right. Before we start, I asked you guys on Twitter to take a look at three videos that my mentor Larry Williams produced. They're not new videos. I mean, he sent them out previously because of his website. He markets his website, ireallytrade.com. But I'm not. Hang on one second. I got something all over my screen. The It's not an advertisement for buying his stuff, but I've been on record before. I pretty much own everything the guy put out because I started really with him. But the videos I thought were pretty timely, considering the information that we're sharing, and it's coming right from the horse's mouth. So while Larry was my mentor initially in the '90s, um, some of the ideas that I learned from him, um, he obviously shared in his seminars and his books and his teachings and such. And I adopted a lot of those concepts, but some of the things that he uh, taught and still teaches today, uh, I don't I don't agree with. Not because I don't think that they work, but I just don't subscribe to everything he says, despite him being my original mentor. Um, so I want to kind of like use that to segue into number one. Just because I use a concept or tool or have an opinion about something, don't let that be a stumbling block. And I've talked about this in other sessions, so I'm not going to harp on it long, but give me a couple minutes to speak on this because it's imperative that you understand. All of us have a a mentor of sorts, regardless of whatever it is we're doing. In trading, obviously, it's very difficult to get your footing in this industry without having someone that's been in it longer than you, has experienced some of the pitfalls and obviously the successes that you're aspiring to have. But if you don't have a mentor, you're going to struggle because you don't have a baseline experience to reference. Okay, you're going through an experiential stage by first introducing yourself to the stimuli, and we're going to refer to it as trading here. When you get into the marketplace without having a framework or a basis to lean on in terms of, okay, I've been here before, this is what should transpire, this is what should happen, um, and if it doesn't come to fruition as you expect, what are the ramifications of that, and how should you react? What's the mode of response that you should have without losing your mind, okay, or blowing up all your money? And because Larry, and you can hear him in the video, he's just like me. He's a little bit of a braggart, but he has the brass to stand up there and say it. No one else has ever been able to do what he did in the Robbins trading contest, and it would have been amazing to see him close it at $2.2 million. Good grief, no one would have been able to hit that. I don't think it's going to happen um, for a very, very long time unless commodities really go way, way down. He had the good fortune of having a lot less margin requirements back then too, so that has a lot to do with it. Um, and I'm not trying to take anything away from him because what he did was amazing, but nonetheless, it would be hard to do given the margin requirements today. So you heard him say in those videos that back in the early ages of his trading when he started getting heavily into pattern trading, he stated that he introduced this idea of opening range breakout. And while some of that may be true, um, I believe that Toby came out with that before him. So the opening range breakout that was before Larry's. I think his treatise on it. Now he had his own introduction to tweaking some of those ideas, like all of us have. Okay, you really can't reinvent the open, high, low, and close. I mean, it's there. It's been there since the market started trading. But the way we finesse that data is unique to each of us. Okay, so when a mentor and myself, when we come out and say these things are mine, this is mine. I have done this. I have done that. Um, it is kind of like a signature saying, look, hey, I didn't learn this from anybody else, so I can't attribute credit to anyone else. But if you have some decency, if you use it, kind of credit me, and that's what we do. When we say that, it's not all ego. It's a matter of everyone asks us the same questions. As mentors, we are asked a million questions, and invariably, what's going to be asked is where'd you learn this from? Where did this idea come from? And some of the things that I learned are right from the guy that I told you to watch this morning, Larry Williams. But as it relates to his opening range breakout, I tried that a lot in my S&P trading and in my bond trading, and I just didn't have the stomach at that time. I have it now, but at the time when I first started, I didn't have the stomach to weather um, those periods of drawdown in the trade. And what I'm saying is when he talks about buying above the opening price, what he's essentially saying is he's looking for the market to prove to him. He needs to have confirmation. And while I don't need that anymore, I believed it early on because he said so. And again, I'm not trying to beat up Larry Williams. All I'm trying to say is I used his information and graduated to a different view on the marketplace as it relates to the daily range and short-term trading. And I personally believe that my style of entry, my power 3 concept, and using the opening price 180 degrees different to what he's teaching and still teaches and uses today is superior. And I think if you watched any of my work, you would quickly agree that that's the case. Um, when we talk about buying a market, you really want to be able to ascertain the levels that have the highest probability of supporting price and also repelling price from those lower levels up into a higher close. That's what you're looking for as a day trader. As an intraday trader, as a scalper, you don't necessarily need that. You can work with that reference point after the fact. For instance, in New York Open, once you have something priced in on the London Open, New York Open typically is a really easy trade. And we're going to talk about that with the British pound today. But the idea of, and I'm going to do a little bit of a rendition of illustration. Okay, we have a crude open, high, low, close bar here, or candle, or whatever you want to call it, the range for the day. I'm going to draw it out here in a crude manner. And we're going to assume for a moment that we are a buyer. And some of you seen some of what I'm going to discuss, but I'm going to add to some of the things that I've said in the past to kind of like, we'll come back to that in a second. We won't need that for right now. We're going to assume for a moment that the market opens here, okay, and we'll make the range a little bit bigger. And what Larry's saying is that if he's predominantly bullish, okay, and this is, I'm showing you the mindset, how I transitioned from how I learned from my mentor, him, Larry Williams, and how I learned how to view the market in a totally 100% contrary view of how he interprets price and 98% of everyone else out there in the marketplace. When you're bullish on the market, Okay, and trust me, you'll see this if you look at anybody's work. They all have very similar themes to what I'm going to explain to you here, but it's 100% different to what we teach or what I share.